Good morning. Today is Friday, March the 10th. The time right now, Singapore is 11:07 in the morning. Over there on Wall Street, we can see that major equity index actually came off quite aggressively to the point whereby the market took out a key chart point, in my opinion. When we look at the Dow Jones itself, this is not the Dow Jones chart. This is the Dow Jones chart. Okay. Now, when you look at the Dow Jones, you can see that the market has a massive rally, and all I was saying that this pullback from 34,712 looks like part of a fourth wave, and if that's the case, it is still allowable. Okay, despite the market pulling back to 32,200, which was originally my target. Okay, now the market came to this point that is every possibility this is the termination point for this move down, and then tonight there is a possibility market can actually use this as a base to propel higher. Okay, the whole idea is this: whether the Fed will be increasing rates by next week, we do not know. But the number coming in last night, the one catalyst that caused the market to came off last night was the weekly jobless claim, which actually increased 11% on a week-to-week basis, and on the month-on-month basis, this is the highest number of people actually claiming jobless benefit. Because if you are unemployed in the States, you can actually go to seek federal help to get some kind of financial relief, and number of people actually going to take that relief has actually increased on a week-to-week basis by 11%, and this is the highest in 5 months. And there are already analysts saying that this tonight's non-farm payroll jobless situation is likely to accelerate, and that is actually painting a picture for less of a chance for the Federal Reserve to actually increase interest rate further. So from the Federal Reserve point of view, that is actually a piece of good news if this is the case. But however, the market also look at a position that if this is the case, maybe the recession is already here or getting very close to a economic recession. So again, there's a bit of a mixed signal. Is it going to be a good number? Is it going to be a bad number? Is the Federal Reserve going to further high interest rates, which is likely to be the case based on what the Federal Reserve Chairman has been saying the entire week, especially on Tuesday, because he come across as being very, very hawkish. So if that's the case, then interest rates likely to go higher. But then again, if the U.S. economy slips into a recession, maybe the central bank would have to rethink. Maybe they have already hit the terminal rate without knowing it. So we will have to see. So the market is a little bit jittery going into tonight's non-farm payroll. So we want to watch. But chart point, I think the market has a very good chance that it may already hit a bottom here at 32,200 and may be using this area to actually propel higher. But anything can go wrong here. If the market accelerates to the downside, of course, this outlook will have to be revised, and we will have to see what happens after that. Okay, over the S&P 500, the market is not as weak as what we saw in the Dow Jones itself. Based on proportion, we can see that the rise from 3,491 doesn't look complete. All the while, I maintain that this ideal target is at 4,370 onwards. And last night, market pulls back, and where we are right now, we are actually at the lowest point. If we go down any much further, we are already lower than February. So this market may actually have more room to go to the downside. So unlike the Dow Jones, which is the weakest link right now, S&P 500 actually has a little bit more room to go down. Maybe it will go down to 3,800 levels, and that area will be a more sensible level for the market to use this as a base to propel much higher in the days going forward. But in the meantime, I think the market is vulnerable to the downside, okay, despite what we see in the Dow Jones. Okay, now in the Nasdaq 100, this is by far the strongest of the three equity index. Market did not come down very, very much. In fact, it has not taken out the much low so far. Okay, so this is by far the strongest on a relative basis. But then again, if that's the case, the market have rooms to go down to test 11,400. So we still have a bit of a room to the downside before we see some kind of symmetrical measurements here. Okay, so in the sense, do watch out for further losses going into tonight's number. Okay, over in Asia, we can see that the Asian markets react quite differently. We have the Nikkei actually hit a high of 28,734.8 last night, which is the year's high so far. And I maintained yesterday's update that this area is no longer suitable to continue to chase the market higher, because we are at that point in time whereby the market is vulnerable to the downside. And true enough, this morning we have a gap down from last night's closing price from 28,735 thereabout. Okay, and that completes what we call a larger degree three wave, and the market right now is poised to trade further to the downside. Now the key level to watch will be 27,000, and if these levels cannot hold, then of course the entire larger degree downtrend will reimpose its dominance over the marketplace, and we may be seeing much lower prices going forward. Over in the Shanghai Composite Index, we also saw prices pulling back, but this pullback is not in danger of cancelling out the rebound that we saw in from as far as late October last year. Okay, so we can see that this market here, although it looks symmetrical, it has not quite reached its target. The target is 3,372.5. The highest so far that we have seen so far this week is 3,342 and 0.9. So we can see that there is a little bit of a room upstairs, although not very much. But by and large, you can see 3,226 is a key point here. The market do not break this level convincingly. There is every possibility it may use this to bounce higher towards 3,372. Okay, over in the Hong Kong market, we can see the Hang Seng market continuing to lose ground, falling from 21,000, which it achieved on Monday itself. So since Monday, the market has been falling practically every day, and this morning we can see the market now is testing the 19,500 levels. Will it break? I think there's a very good chance it may actually break and go down to 18,000. So we have a little bit of more downside risk in the Hang Seng Index. What about currencies? When we look at the dollar index has been maintaining an upswing all the way to 105, which is last traded on Wednesday. 105.88 was a high this week, and over yesterday we can see a bit of a pullback. This morning we see a continuous pullback, but then again, this structure here from the rebound at 100.82 does not look compromised yet. I think it still will go up. My immediate target is 108 in the dollar index. Over in the major currency pair, we see because the dollar has actually pulled back somewhat, it allows the other currency to actually rebound. But in the euro versus the dollar, the euro did not rebound significantly. There was a bit of a rebound, but this rebound is very tentative. It does not tell us anything. I think the downswing from the 110 still is going to see further prices erosion in the near future. So I do believe that the downside here is all dependent on this level there, 104.80. Okay, 104.80 is going to be the immediate level to determine whether the market can go higher or it's going to go lower. A close below 104.80 is going to set the market for lower prices, but on a close-to-close basis, if 104.80 holds, then this may be an area in which it may actually go higher. That means the dollar, based on the euro, versus the dollar chart does suggest that if the euro rebound from here, the dollar is going to come off. Okay, so over in sterling, we also see a very measured pullback in the sterling versus the dollar, and overnight we have a bit of a rebound from 118.40. So we can see that 118.40 is the same equivalent level to what we saw in the euro dollar at 104.80. Okay, between these two, I think it's quite similar in structure. We can see that the market is basically holding up. Now, of course, the market can still go down to 117.80, but I think the pullback yesterday may actually be setting the stage for probably higher prices going forward. And that means, again, based on the sterling, we may see dollar coming off in the near future. Now, when we look at the Aussie versus the dollar, we get a slightly different kind of picture here. Now, the fall from 0.7160 in the Aussie versus the dollar is a lot deeper than what we saw in both the euro versus the dollar and sterling versus the dollar. And that means, based on this chart here, the Aussie may have some more room to come down, and that means against the Aussie, the dollar may actually go up. Okay, so again, here we have a big of a mixed picture here between euro, sterling, and Aussie. We have slightly different kind of outcome here. So what do we do? We look at the other major currency pair. Let's take a look at dollar versus the yen. Now, the the rebound from 127.20 all the way to this week high of 137.90 looks to be very much intact, and there is it does looks like it's poised to go even higher to 139. So the dollar versus the yen chart is still suggesting that we still have this rebound here that is still very much intact, and it may actually go even higher. Okay. So there you have it. The dollar is actually a bit mixed across the major currencies. There is no uniformity here. Now, when you look at the dollar versus Canadian, the Canadian dollar right now is actually very, very weak because the crude oil prices has not rebounded significantly. And against the Canadian dollars, the US dollars is very, very strong. But be careful about chasing this market ever higher, because last night we have a high at 138.5. And that means the market may have already hit its optimum price level for now, because the rebound from 132.25 looks about symmetrical at this current price itself. That means to say it is vulnerable to the downside, but of course there is no saying that it cannot accelerate to the upside beyond 140, but we will at this point in time have to assume that this is where the terminal rate is about here, and those who are already long may want to consider taking some money off the table, and for those who are no position and wanting to buy, this is a very dicey proposition here. I think the odds is to the downside, structurally speaking. Okay, so I'm not going to do anything on the euro versus Canadian. Okay, now when we look at the precious metals here, when we look at spot gold actually have a bit of a rebound last night, but it's still very, very tentative. Yes, the market may actually bounce back all the way to $1,862 thereabout, but I think the structure does appears that if the market can rebound to anything between $1,862 to $1,875, that area is actually vulnerable for the re-emergence of selling interest, and which may take gold market all the way down to 1,732 levels. So there is that bias to the downside for now. Okay, whereas in the silver market we see hardly any rebound at all. We can see that silver market actually took out the $20 bottom, and it's traded to as low as $19.91 last night, and this market is very, very vulnerable for it to go down to below $19 for now. Of course, when you compare it to the COMEX silver market, $19 is where it should be able to find some kind of support. But in the cash market here, the spot silver market, the bottom here is a lot further near the $18 level. Okay, so be very careful. Over in crude oil, we still see the market basically consolidating between $70 and $80 for now, and between this $10 trading band, the market is just not going anywhere. So maybe for a time being, our money can be better deployed somewhere else instead of trying to pick a bottom here. Okay, over in natural gas, I am already long. The market actually is pulling back. Currently, it's trading just below $2.50. The high so far last week was actually $3.03. There's every possibility market may rally one more time from current levels to test the $3.50 level. Okay, I'm still optimistic. Whereas the big move come from surprise, it come from cryptocurrency. Now, previously, I did mention we have a 5-wave rally from $15,480 to $25,270 per coin. And as the market pulls back, I was thinking $21,370 could be a bottom here in which to fulfill the 4th wave for one lesser degree, but the market went a lot deeper than that. It took up 20,000 and then a bit more to 19,810. So this actually was a bit of a surprise for me, because I was thinking that this area of 21,300 could actually hold, and I have actually bought some Bitcoin around these levels, and the prices did not rebound. It went sliced through 20,000, and now we are at 19,800 levels. This morning we have a bit of rebound. Prices has gone back marginally above 20,000. So let's hope the market can have enough strength to do a technical rebound back to where I entered, and it may give me a chance to exit this trade and then watch for a while. Okay, so I hope I get the rebound later in the day. Over in Ethereum, it's the same structure that I mentioned. There's a 5-wave rally here in the Ethereum from $1,071.50 to $1,742. And the pullback, I was expecting this pullback to actually stabilize at $1,461. Okay, and I placed a buy order here, and the market slides through to $1,408.20. Yes, currently we have a bit of a rebound, maybe less than $20 rebound so far. I just need the market to go up a little bit more, maybe another $40. I want to exit my current long position and then stay out and watch. Okay, but by and large, I have already committed to the long side. Let's hope things will work out for me. And in the meantime, do remember tonight we have non-farm payroll at 8:30 p.m. Singapore time, and this is going to be a lot of fireworks. Okay, so do watch out for tonight's non-farm payroll. Bye bye. Take care.